Yeah, so the main question to ask any lender is like, how are y'all qualifying my short-term rental? I would say like 99% of the lenders, in particular in the DSCR space, and on the market in general, are qualifying deals based as like long-term rentals or they're qualifying it with like 12 months booking history, right? A lot of the time, if I'm buying a short-term rental, it might not be used as a short-term rental right now. I'm not going to have this 12 months booking history, right?
Welcome to the Texas Real Estate Pros Show, where we interview Texas real estate professionals from active real estate investors, lenders, property managers, and many others that provide goods and services into the real estate investing industry in the great state of Texas. Our goal is simple: to share what's working now to help you improve and scale your business to the next level, and to meet the pros that can help you get there. Texas Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and entrepreneurs build the business they need to live the life that they've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Tanner Lewis, is a senior account executive at Easy Street Capital. They're a private lender headquartered in Austin, Texas, and serving real estate investors across the country. You can find them at easystreetcap.com. Tanner, thanks for taking the time today.
I appreciate it, Dylan. Thank you so much. Excited to be on the show.
We were talking a little bit before hopping on here, and Easy Street is really in a niche in the private lending space. And you were mentioning to me how short-term rentals is something that you guys really excel at. So I figured we would start there. You know, for folks who are looking for someone to lend on a short-term rental, what should they be looking for from their lender?
Yeah, so the main question to ask any lender is like, how are y'all qualifying my short-term rental? I would say like 99% of the lenders, in particular in the DSCR space, and on the market in general, are qualifying deals based as like long-term rentals or they're qualifying it with like 12 months booking history, right? A lot of the time, if I'm buying a short-term rental, it might not be used as a short-term rental right now. I'm not going to have this 12 months booking history, right? I'm not going to be able to qualify it as a long-term rental because long-term rents are well below what I'm looking at as a short-term rental investor. So the big real question to ask is like, are you qualifying a short-term rental like a short-term rental? Couple ways to qualify it, I guess, in the market right now. There is a short-term rental 1007 and a couple other forms out there where it's like appraised market rent as a short-term rental. That's kind of option A is pros and cons to it, but the main con to it is I don't know exactly what the short-term rental revenue is going into the deal before I get under contract and put my earnest money down, stuff like that. Option B, and the most popular one right now, is qualifying a deal with AirDNA projected income. So, on the underwriting side, we just pull it bed bath count, plug it into AirDNA, and then spits out projected revenue, and it's gross revenue. So that is prior to cleaning and maintenance, property management fees, stuff like that. And then that's what we're generally underwriting with in order to qualify the deal, essentially.
Now, when folks are coming to you and they may be a newer operator, walk me through the, you know, arithmetic that's happening when you're looking at, hey, are we going to lend on this deal? Maybe they don't have a short-term rental that they've previously done. Uh,
Yeah.
would that be something that you would take a look at? And then also, of course, credit's going to come into play.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
But if it's more of a rental grade property already, like let's say it's livable,
Yep.
how much experience would they have to have, let's say as a general contractor or
Yep.
doing flips for them to be qualified?
So, with our products at least, we don't have any experience requirement for DSCR. We just require that you own a primary or own a property. You're not a first time home buyer. But besides that, you can be a first time investor. Rough kind of credit parameters. I want to say like a 680 credit score plus, and we can get up to like 80 LTV on a short term rental. Um, and then a lot of the time too, it's like a lot of DSCR lenders, what they're really underwriting with is the DSCR ratio, right? A 1.0 is break even cash flow. So, with my income coming in, I'm paying for my principal and interest payment, your mortgage, um, taxes, insurance, and HOA fees if there are any. So generally a 1.0 is good. And then there's also a lot of products out there that are able to go what's called negative cash flow, no ratio, as well. So let's say we're qualifying a deal. AirDNA is pulling really low because we have a lot of a lot of people in the market have second homes that they toss up on Airbnb. So they ran out like half the year. AirDNA projections are coming in low. We know that the investor knows that. So we think it makes sense to qualify it as a no ratio DSCR land, where let's say underwritten income is 0.75 DSCR, or you're covering like 3/4 of your monthly PITAA payment. That's still okay. We can still qualify that anyways. So it's a little bit more of like a holistic approach to each deal.
Now, when we talk specifically about uh, what happens once they're funded, right?
Yep.
In the short-term rental space, these properties might not be up and running for several months in the sense where you need some type of booking history, or at least you need an active account. So for folks who may not be well versed in Airbnb, they may think, money may just start coming in immediately, when in actuality, there could
hmm
be a type of build up period. Is this something that, you advise folks on or caution folks with when they are coming to you as a first time Airbnb? And then also, too, I'd follow that up with are there any things that you have seen folks do that they maybe should not be doing, or things that they should stay away from?
Yeah. So I guess regarding like the build up period, there's always like I'd say about 3 months worth of time where you're kind of getting up and running, getting more bookings, getting more income, stuff like that. Generally speaking, we don't really factor that in with our projections for it. Um, Mostly because a lot of it can be due to seasonality, right? If you buy one in Outer Banks, North Carolina, for example, during wintertime, you're not going to get any bookings until I don't know April, hardly. So a lot of it can be due to that. So we don't really bake it into our underwriting projections, but I do think when you're talking about, I guess, like things that they can possibly do better. I what I've seen is a lot of short-term rental investors where I buy like a single family, and let's pick a city like Washington D.C. area, right? Not exactly a hot short-term rental market. Um, and they just toss it up on Airbnb. They don't do any kind of special renovations to the property. I've seen those investors not do so hot. What I have found successful though, and there's a couple examples like here in Austin. There's one Airbnb where it was rehabbed.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And it was fully painted top to bottom pink. Their target demographic is bachelorette parties. So really going above and beyond, like in particular with the rehab. So I think what they did, they put a pickleball court in the back. They had like a pink dinosaur out back too. I don't even know. And then there was like 8 different like makeup vanities like in the living room or something to like literally just to get ready to go out for the night in Austin. So I've seen those type of investors where they really go above and beyond with the rehab, and in particular with the experience that they provide to the customer. They've done very well. If you just toss up, like if I put my house on Airbnb right now, and then put it up on there, it's not going to do too hot. And then I guess regarding what you were kind of talking about for the boot up period, right? When it comes to refinances too, a lot of lenders are only going to be able to take 12 months of booking history, which kind of puts you in a pinch, especially if you buy a property, you rehab it with hard money. Let's say you rehab it for like 6 months. Hard money debt's coming due soon. You got to refinance it. Right. Most lenders are going to be like, we can either qualify as long-term rental or you can wait another year and we can do it. So what I like to do instead is just qualify using AirDNA projections and get a booking and a listing and we're good. So refinance process is at least pretty easy a lot of the time. You just got to find the right lender for it.
Now, when folks are going to lenders for fix and flip, for short term, right, for DSCR, they have right now, I would say, more options than ever before. Because you had even traditional mortgage companies that are doing DSCR, from what I understand. Banks are
Yeah.
doing DSCR, right? So, when people are looking at where do I go to, the places that can't factor into short-term rental income, would they be then qualifying them for less money effectively because they're only going based off of, what the projected rents would be on a year-to-year lease?
Yeah. So a lot of there's a lot of lenders out there that offer both like conventional loans and they also offer like a DSCR product, which is there's a lot of qualified mortgage aspects with that type of product where it's like, oh, has to be a 1.0 DSCR, has to be qualifying with long-term rents. So that in and of itself puts a lot of restrictions on, for example, max leverage. If I can only have a 1.0 DSCR qualifying as a long-term rental and I'm buying $1 million property and, Aspen, they're not going to be able to get you the leverage that you need going with that more traditional option. A lot of the product differentiation on the market, like, you can offer a QM type DSCR product, but there's also commercial only lenders like, a lot of the big players out there, Kiavi, Vizio, Easy Street, that offer like only investor products that can get away with a little bit more flexible guidelines like negative cash flow. Some offer short-term rentals, for example, stuff like that. So I'd say probably that's kind of one of the main factors there.
Now, for folks who are looking at, hey, which strategy do I go with? Do I go short term rental? Do I buy and hold this? Do I go, midterm, furnished housing, corporate housing, long term, right? Um, and then I've heard this term like slow flip, right, which is an interesting one. It kind of combines several different exit strategies. Well, what would you advise folks to evaluate, when they're
Yeah.
looking at which one is right for me, right? Which
Yeah.
and the area that they're investing in. What what are the hot buttons really that they should be looking at as far as, hey, is a short-term rental going to be good for me? Is a fix and flip going to be good for me? what would you tell people to look at when they're not just underwriting, but also determining what's right for them?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, I think like regardless of the property in the market, in order to figure out like if it is a good strategy for you, would be like how much time do I have? Short-term rental or even a medium-term rental is going to be a lot more involved than something like a long-term rental where you have a property manager, stuff like that. That's honestly probably like the number one thing. You can always get a property manager. Another one too is a lot of people will turn to short-term rentals because of the and I'm going to butcher this. I'm not a CPA, but the short-term rental loophole, right, where you can do a cost segregation of a property, hit that. I think it's 100 hours a year minimum for active involvement in real estate, as long as you have bookings less than 7 days, and then you can essentially cost segregate the property and write the bonus depreciation off against your active income. That's one of the main kind of reasons people turn towards short-term rentals in particular. So, it depends on your tax burden, depends on, the amount of time that you have to spend on it, I would say. And then regarding like underwriting deals, at a individual level, I always suggest looking at the long-term rental income and seeing, okay, what's my worst case scenario if I do have to pull this off the market as a short-term rental, keep it as a long-term rental? Like, am I break even? How much am I losing? Can I support that? It's always a good strategy to play best and worst case scenarios. And then same thing, like if you're gonna flip a property, right? You can wholesale it if you don't have enough time for the actual rehab. You can flip it, turn a quick profit, or you can hold on to it as burr. Then you can add fourth. Put it as a Airbnb, what I like to call it, where you rehab a property, hold on to it as a short term rental, which have become pretty popular recently.
What I've seen from being a realtor in Texas is that, people happen to consider other exit strategies, especially if you're selling a home and it's been sitting for a while. You may have to consider, hey, am I going to put a renter in there and relist the property in a year? What's that going to mean for, my current situation? Am I going to be able to you know, tie up all the loose ends that I have right now in one sense. But in another sense too, what we're seeing is that people have to be open to more creative exits. Like I've seen more buyers interested in making seller finance offers, and sellers may have to be interested in that too if that's where the market is at. But also rates are coming down, so that's at least a positive there. Your business as a private money lender, are you seeing more fix and flips now that rates have been dropping, and it does seem I'm optimistic at least. Are you seeing more fix and flips happening?
I mean, I guess so. At least in the investor space, it's not as cyclical as like the owner occupied space, right? Owner occupied, all those mortgage lenders have big booms when rates come down and busts when rates skyrocket. From what I've really seen is like investors don't really care what the rate is, which is crazy, taking it at surface level at least, but it's the analysis of, oh, I can either buy it now with a higher interest rate and hold on to it for a little bit. Rates come down, I can refi it. Great. Because when rates drop, that demand goes up. When demand comes up, prices go up. So a lot of the time, rates coming down creates more demand, which creates higher housing prices. So it's often better to get in when rates are high and just refinance when rates are low. I guess that accounts for a lot of the stability, and investors just keep consistently buying them. And then like hard money rates, roughly on average over the past few years, have They've come down slightly, but they normally don't adjust as quickly as like DSCR. DSCR just, daily, weekly, whatever. Hard money rates are like maybe once a year, stuff like that. Um, the biggest factor with hard money rates coming down, I guess, across every lender in the space is a lot of lenders are starting to securitize loans ourselves. So like we just closed on our second RTL securitization. RTL is hard money. Um, and then that brought our cost of capital down pretty significantly, which translates over into us decreasing our average interest rate for hard money from like a 10.9 to like a 8.9 or 9.9, somewhere around there. So that's at least what I've been seeing nationally.
It's interesting because you brought up an interesting point. I actually haven't heard that one before, but I could see it, and certainly in some with some investors, interest rate agnostic. I'm buying the deal because if I can buy it at the right price, then I can make the interest rate work. And so that's why they say, all the money is made at the buy. We are coming up on time here, though, Tanner. Any new projects that you're working on, and then as well, what's the best way for folks to get in contact with you and your team?
Yeah, in terms of new projects, I have a couple planned for this year, but none are ready to be released at the moment. But I guess regarding contact info, just email me at tannerl@easystreetcap.com. If you want to quote out a deal or want to connect and talk strategy, I can either connect with you or one of my team members can.
Tanner, thank you so much for your time today. Thanks for coming on the show.
I appreciate it, Dylan. Thank you for having me.
Thanks for joining us for today's show. If you're looking to take your business and your life to the next level, you really need to learn more about the Investor Fuel Mastermind. It's your shortcut to success. To learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other amazing entrepreneurs, 100% financing on your deals, member-only discounts, and so much more, please visit investorfuel.com/Texas. By the way, Investor Fuel is even Texas-based. Also, if you're interested in applying to be a guest on this very show, the Texas Real Estate Pro Show, please visit investorfuel.com/Texas. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe on YouTube or your favorite podcast app so you never miss another episode. We'll see you on the next show.